Welcome to the Real Estate Show on KMED this weekend. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. And thanks for being with us on this last weekend of May, the first day of June as well. This show repeats, of course, at 9 a.m. Sunday morning right here on AM 1440. All of our shows are available on YouTube now at youtube.com/Real Estate Show Oregon. So we hope you'll go there. All that kind of good stuff. Well, here we are. You know, we were yapping back with Shelley Culbertson. She's the marketing manager for Ticor Title, and of course, Shelley's been with us for 5.5 years.
Yep.
5 years you've been with us.
You guys haven't kicked me out yet.
And Shelley was the one, and I still always remember that show when she predicted about 5 years ago. Well, maybe not quite that far.
We were just into the program.
We were just into the shows, and Shelley comes on here and says, we are going to have a housing shortage in Jackson County. And it was just at the worst time, the economy, everything, there was vacancies. And remember, 66% of all sales were foreclosed properties at the time. And Shelley said, we're going to have a housing shortage. I said, there's no way. And of course, she's turned out to be.
There was so much inventory out there.
Wow, you really were.
You actually said the right word.
Yeah, you were right. I know. As much as that pains me sometimes to say that thing, but you were right, and that's what we're experiencing. Is that what I hear you say?
Well, yes, we do, and every realtor that I'm talking to right now is really struggling in the price range, anything under $350,000, especially in like East Medford area. Once it goes on the market, if it's priced right, it has multiple offers on it.
It always is about price.
It is.
I mean, that's kind of like the bottom line as you go through this, isn't it?
And what we're seeing is that we had a little push with new construction because there were a lot of lots that were that distressed property. And most of those lots are currently being built on, or they have been built on. And developers are not able to develop the land quick enough now because it takes a time period to develop a piece of property to keep up with the demand of what the housing shortage is.
And we heard, Joe, last week when Brad Bennington of the Home Builders Association was with us, is that the lots that are remaining are going up in price.
Rapidly.
Yeah.
Rapidly.
And I asked him, too, and that was the $64,000 question. It was like, well, how many more of those distressed lots are out there, not in the hands or be able to be snapped up? And he said, well, that's the real good question.
That is the real good question.
You don't really know. Well, anyway, so that's what's happened. The fourth person here today we want to introduce you is Guy Giles. Guy is from Summit Funding and is going to be our new mortgage resident expert here on the Real Estate Show. So thanks to Guy coming here. Nice to visit with you today. So this is the radio part of this world that we live in.
Well, thank you very much. I'm excited. I listen to this radio program probably, I don't know.
He's one of our 5 listeners.
Some point.
Well, it's good to have you here. Tell us, first of all, Summit Funding is, when you think of all the mortgage lenders in the Valley, Summit Funding, you're a new player in the market. Is that right?
Yeah, I spent most of my career with one of the evil
there you go.
big guys and decided to just kind of go out on my own. I went up against this company about 6 months ago on a deal and was just completely impressed with the way they did everything from start to finish. So it's a company that's been around for 20 years almost, but we're brand new to the Valley here and just excited to be on the show and part of this.
All right, so where are you at? So in case people want to say or you can give your number later, but Summit Funding, where are you located at?
We're right behind Costco at 3613 Aviation Way.
Oh, okay.
Kind of back behind the sushi place and just stuck back in
Barbecue
there. But it's a
and sushi.
great spot.
Well, you don't have to go very far to eat, which is really good, you know.
And I like to watch planes land and take off, so I'll just come hang out with you for a while.
Well, that's pretty good. Welcome to you. And of course, we're going to be hearing all about, the mortgage. The mortgage world is crazy. I mean, okay. In the MLS statistics usually show that April is the busiest month of the year in real estate sales. Right?
You're going to ride this horse again?
No, I'm just going to say it. I'm off it. I'm off it today because Shelley has told me that May has turned out to be and will turn out to be a busier real estate month in Jackson County than April was, correct?
Yes, and
And how do you know that?
I'm foreseeing that June is probably going to be better than May. And I work off closings. You understand the stats that I look at is I see that the escrows that are opened within Ticor take 30 to 45 days to close.
Sure.
So I'm looking at the numbers of what I'm going to close in June are the numbers off what I opened the end of April and the first part of May.
All right.
And we took off like gangbusters in May. And our opening orders in May were higher than our opening orders in April. So that leads me to believe that if those orders close in June, June's going to be a better month than May.
Wow.
Wow.
What are...
Did you get all that?
I followed that. And I bet a lot of listeners do too. It made sense. But what is it? I mean, what is closing? Is it price range? What is it? Where is it? Is it everywhere? Is it certain places? Because
it's kind of interesting because that's what Guy and I were talking about. And Guy was, if you want to share a little bit about what you're seeing in the lending world and the loosening of some of the reins.
Definitely Fannie Mae's just coming out with things almost weekly at this point.
Fannie Mae,
yes. We are a direct lender with Fannie Mae, Freddie Mac, and Ginnie Mae, by the way. But, they just came out with a memo on their own. Usually, it's felt a little bit in the lending world over the last 6 or 7 years, like everything's just tightening up.
Well, that's what we heard. It was tight. You couldn't get it. You had to have impeccable credit almost. It
and
seemed
a firstborn
like,
child.
And your firstborn.
And we had pent-up demand there and buyers that were getting loans,
All right.
A lot of times these days, the firstborn child doesn't even have to have money down, believe it or not, with Fannie Mae. You can get 100% gift funds, and there's just a whole lot of things where they've really loosened up. It's historically, FHA has been kind of the gateway into home ownership, and that's what it's designed for, and it's done a really good job. But there's some other places with some grants and with again, Fannie Mae just kind of loosening up their guidelines that are.
Now, you both have been saying, because I remember at one time in our show, in FHA loans after the crash, FHA loans were making, I remember reading this and we talked about it here, FHA loans made up 87% of all loans in this country at this one time period. 87%. It was the only way people could get loans.
And I think it was the government's way of taking back control of all the subprime craziness that was going on.
So they did. Okay. Today, is FHA still the lucrative, because it's not, they don't do as much as they used to in terms of percentage. Has FHA lost its luster, or what is happening in the world there of loaning that FHA may not be the great deal that so many of us think that it is?
Well, I think one of the biggest contributing factors to that is just their liquidity. They needed to kind of recapitalize, so they raised the mortgage insurance up and then made it for the life of the loan now on FHA. So people are looking for other alternatives to get their financing done, because that mortgage insurance was something that really wasn't designed to be there after you got down to around 78% loan to value. So it's just some other places and some other things kind of stepping in to fill that void. And I do see them gaining a lot of traction, and the FHAs are not as prevalent as they were.
Well, the other big thing the FHA did that started this year is they dropped their what do you call that?
The maximum loan
that they can loan on. It was over $400,000 start of the year. Mm-hmm. So that it made FHA more viable for those people that may be buying up or buying to the next level.
Okay.
Max level now in Medford is $279,000.
Whoa,
yeah.
That's a huge drop. Mm-hmm. That's $100,000 plus drop.
Mm-hmm. You got to take off your shoes to count that one.
Yeah. So when you get to that level, that at 270, you're going to have to go somewhere else, right?
Yes.
All right. So where am I going? I mean, what are
You're going to Guy.
Yeah, you're going to go talk to Guy.
What am I going to do when I get to? What am I going to ask you?
What are you going to have for us when we get there?
Yeah.
Well, there's just a lot of things. Historically, again, with these guys kind of loosening up their guidelines on the conventional, and when I'm talking conventional loans, it's what the government has allowed Fannie Mae and Freddie Mac to buy. They generally, if it's not a FHA or a government-backed loan, as long as it's under $417,000 in this area, it's generally just a conforming loan. So traditionally it was about 3% that you needed of your own funds, and they've just kind of taken it down. That way parents or grandparents or people can just kind of help their kids get into a house.
You're talking about what? The 3% as what? Down
of your own personal funds, sorry.
This is for an FHA loan or a conventional loan now?
It would be for a conventional, but they've actually done away with that overlay now to where you can do 100% gift funds on conventional loans.
On the down payment, you mean?
Yes. So if you want to help your kids.
So if parents want to help, instead of do not co-sign for your children. Remember that?
Repeat that one more time.
Right. Shelley is here. We will say do not co-sign for your children on this deal.
Personal experiences?
Yes, I have. But there's an alternative here that sounds like I would much rather give them the money to give them the down payment and let them be on their own than signing for and helping them co-sign the loan. I didn't know that's new then.
It is relatively new. I don't know exactly when they changed the guideline. I didn't do that research today, but yeah, I think it's going to help a whole lot of people. Just and again, as long as you're not on the hook, because I see that all the time with student loans, car loans, things where you've co-signed for your kids, and I mean, and Freddie Mac actually has a really good kind of co-signing, non-owner occupying co-borrower thing. So if you do want to get into that instance, there's definitely a for that. But if you can do it on your own, I say get the kiddos. A little bit independent.
So in the old days, I remember when I bought my house, and that's when you bought yours. But when I bought my house, we had to have 20% down to get a conventional loan. And now you're saying it's as low as 3%, right?
Well,
to get a conventional loan.
Conventional, it's actually 5. They were down to 3. I'm sorry, I'm kind of confusing things here.
Okay.
It was 3% of your own funds that you were able to come in with down, and there was a pretty good 3% loan program, but honestly, and that's why it's just good to go in and talk to
a lender.
Yeah, go in and talk to a lender, because there are bond programs that are specifically designed to help first-time home buyers. I mean, I think there's a big push to get this housing market back on track, which it really is. But it's just such a driving force in our economy that there's pretty much something for about everybody out there right now.
Well, the interesting thing what were you telling me about the credit score requirements for FHA loans for the first-time home buyer? How low could they go? How low
believe it or not,
can you go?
So, and just in the interest of not getting everything confused, they do need their own. They do need their own funds if they go down to 580 on FHA loans. So you can go down to a 580.
And what did it used to be?
620 is kind of the conventional.
620, 580.
Yeah.
Okay.
So really pretty low credit scores, and that's one thing that kind of sets us apart too. I had some homeowners, or they weren't homeowners yet, come in and see me, and we have some really good credit simulators that show if you get on your husband's Les Schwab account, believe it or not, because it's an older account, you may not have a big credit history. It'll give you an old account, give you some points on your credit scores, and obviously I can't guarantee to fix everybody's credit. There's some damage that just takes time, but there's just a lot of things that can be done to, even if you can qualify for a 580 credit score, that may not be the best thing for you. You might want to wait a month or two so get your credit score up a little bit, and we can help you do that.
Can save you thousands in the long
Absolutely.
run.
Oh, my goodness.
Yeah.
Sure. By the way, we're with
Package.
Shelley Culbertson from Tycor Title and Guy Giles from Summit Funding today on This Weekend on the Real Estate Show. Pete and Joe here with you. Now, what I'm hearing, though, you guys say is that things are loosening up in the lending world that is causing all these sales that Shelley is saying is happening. Is it, when we say loosening up of the lending rules here, what does that mean? Are we getting in trouble again?
They were so tight they were strangling potential buyers a year ago.
So after the crash, you're saying it got so stringent, nobody could. I mean, we saw that nobody could buy, nobody could do anything. There was no inventory, etc. So things have loosened up. Are we loosening them up too far? I mean,
No.
I mean, you don't think so? Okay.
I don't feel so either. I mean, I think they were definitely too loose for a time.
Too tight?
Or
Too
too
loose for a
loose.
time.
Oh
Okay.
yeah,
Well,
I don't see a whole lot of no docs, interest only loans going on.
If you've got a pulse,
okay.
you've got a loan.
Yeah.
Well, then let me ask you then, Shelley Culbertson, of the bunches of closings at Tycor, and you've had a bunch of them, what are they? Are they conventional loans? Are they FHA loans? What are you seeing? USDA
We're seeing
loans?
a vast of actually USDA. It's almost gotten to the point that that market, because the housing prices are going up, those are less and less because
Now, why is that?
those are going too high up in price.
So what is the limit then that
What is-
USDA...
Well, as far as that goes, we generally run in, when we get on the higher limits on the USDA loans, it generally is an income-based thing because, you're in the low 70,000s for a family of 4. So, we believe it or not, I mean, I know it sounds like a pretty good living, but it just adds up really quick as far as that goes. So that's kind of the issue with that. It's just, if you have money in a savings account, they use that as income on USDA. So it's just it's kind of a tight program. It's a great program for people, but one of the biggest issues around here is just finding properties that are in
USDA qualified.
Yeah,
in the USDA zones.
Right, and it's just kind
Zones
of
and price range, because like you said, you're looking at what can they afford in a payment, and the higher the price of the house goes, the higher the payment's going to go, and it'll kick them out of that ratios.
And it's just kind of a crazy hybrid loan between kind of conventional lending and farm lending, because it's designed to be a USDA, by definition, you're thinking cows and things like that. But it's supposed to be a little more rural to try to keep people, to live in the
small
country.
Towns, to live in small towns.
Yeah, and if you get just a little bit too far out in a small town and you have a couple of outbuildings, then all of a sudden, you're into a value issue on that thing. So. Yeah, so it's competing with a couple of programs.
Well, it has its limit. What I really like about USDA loans is that they changed the program because Congress defunded it, and they brought it back by charging, I believe, was it a 1 or 2% loan fee onto the USDA loans, which ended up paying for the whole program. And USDA loans, rural development loans here, have the lowest default rate of any federal housing program. So, I mean, it's a wonderful loan. Gosh, and if it wasn't for USDA, the real estate market in Klamath County, Douglas County would be just done.
Yeah.
I mean, that's how much it's affected that and how much rural communities are suffering. Hey, we're with Shelley Culbertson and Guy Giles today on The Real Estate Show. Pete and Joe here. We'll take a break. We're going to come back right after this. This show repeats 9 o'clock on Sunday morning, and all of our shows are available at Real Estate Show Oregon and on YouTube/Real Estate Show Oregon. We're coming right back after this.
So that was the
Real Estate Show continues this weekend here on KMED. Pete Belcaster and Joe Brett, the real estate guys, with it here today. I'm a broker with John L. Scott, Joe with RE/MAX Ideal Brokers. We get together once a week here on KMED to talk about real estate issues affecting Jackson and Josephine County, and hope you become, of course, through all of this, a good real estate consumer, a smart consumer, because this is the biggest investment you make in your life. And boy, you want to do it right, because when you mess it up, it's costly. It makes you crazy, right?
You don't mess it up.
You don't want to mess it up, So you
we
want
had
to
plenty
be right
of that
there.
in the last 5 years.
Yeah. Where was Shelley Culbertson? She's the marketing manager from Ticor Title. Ticor, by the way, you hang out there in West McAndrews.
Yes.
You got an office in Ashland.
I kind of cruise around everywhere.
You just go everywhere.
Yeah.
I see you all over the
Well,
place.
crutch you around.
No, I won't be cruising around for another 3 or 4 weeks.
I should say Shelley's bummed that you got a broken ankle.
Yeah, I got a broken ankle.
She's on the 4 to 6 week disabled list.
Yes.
Yeah, that's right. That's right. And I know your North Medford Tornado girls, your softball.
Oh,
your daughter
huge.
played. You're just a nutty person. You got to love this.
I'm loving it. In fact, she's back in town from playing in college, and she went to all the games and is all fired up for it. It's pretty cool.
For that.
Yeah, they're on a roll.
Yeah,
that's
they
really
are.
cool. Title company. Tell people just, what does a title company do? They drive by, your offices, and they see this, and maybe they've never ever had to have a.
Well, we kind of
with the title company. What would I use you for?
Twofold things that we do. One of them is that we insure your property so that you own that property free and clear, other than liens that you put on it yourself. So that's probably the biggest one. So that means, especially if you're buying foreclosed property that was foreclosed, you are assured that you own that property by yourself. Mm-hmm. The second piece is we are a neutral third party. So when we have a buyer and a seller that have come to terms, and they come to us, and one gives us some money, and we take the money, we record the deed, and pass the ownership to the other one. Mm-hmm. And so that way, we are not representing the buyer, we're not representing the seller. That's what the realtors are for. We are neutral. We don't represent either one.
Mm-hmm. Before Pete got into business, he thought the title company was working with the libraries.
Yeah.
Well, that's not quite true.
But the piece that I feel like, especially at Ticor, is we are really we're the experts in this community as to what's going on in the real estate market, because we see it all.
Yeah.
Front
line.
We are. We see that. We see the average pricings coming in. We see the type of transactions coming in. We see whether they're first-time home buyers, investors, et cetera. So we have a good pulse on exactly where the market's headed, where the market's going, and I really take a lot of pride in that with Ticor. We have representation at the national level with the escrow associations. We have representation. We have actually somebody that sits on the Oregon Association of Realtor board. Within our office. And so we're always on the cutting edge of the laws that are changing and things that are coming down, and we try to get that out to the realtors in our community.
Now many times, and I've called you,
oh yes,
I can't believe how many times I end up calling Shelley, because I get clients have questions that I'm not an expert in this particular area. Mm-hmm. So I have them call you, but people can use your services prior to.
Yes.
If they have questions regarding what lot lines or this, or I mean, what are the kinds of things that I could call you for before I even want to sell my house or that kind of thing?
And I think that's really big too, is before consulting what needs to be done as a neutral third party, we can kind of sit down as a title company, and I've done this with many, many realtors, lay out what's going on with a piece of property and how to remedy it. And it may be to remedy something you might have to go to an attorney for something like a lot line adjustment or having an easement drawn up or something like that. But for example, I had a client come in this last week that wanted to sell her piece of property, and we ran the title report, and there were 4 owners to that piece of property. And she thought she was the only owner. What had happened is she had granted easements to all of her neighbors to be able to cross over that property. And the prior owner, instead of granting an easement, they granted ownership to him.
Oh, my goodness.
Wow.
Oh.
Big mess.
Yeah.
And so, luckily she has, great rapport with all her neighbors, and she's able to go back and release the ownership rights and put an easement on the property. But she does have to go to attorney for that because they have to drop the easements.
Right.
Well, that'd be something. I know I've got a client who has a piece of property. He has a 99-year lease. If you can believe that. I called Shelley about this because I didn't know how to, I didn't know I've never seen that before.
That's pretty common in Mexico.
In Mexico.
Yeah.
Well, it's common in Ashland then too, because it happens there. So it's just weird questions, and that's where the title company really comes in very helpful.
It's a great place to start.
I really found it's a great resource when you have questions you don't know the answer for, because the worst thing you can do is to give an answer that you don't know what in the world you're talking about. That's bad.
And believe me,
it's bad.
You don't want to go digging through the county records and do the type of search yourself. It is a science and an art unto itself.
All right.
A lot of work.
Also, with Shelley today is Guy Giles from Summit Funding. And Guy joins with Summit Funding, the real estate show beginning in July. Is here today with us. We're talking in that other segment, about loosening, lending restrictions. So do you guys think what's driving this market doing what it's doing? Because it's obviously, there's inventory. I mean, inventory is up and sales are up. All right.
Yeah,
Prices are
I
up.
think it's a combination of exactly what Guy talked about. Is the loosening of the, loosening a little bit of the apron strings. And I think it's a combination of just the shortage of the property underneath the $350,000 range.
All right. What's the range for loans right now this week, Guy, that you just went through for conventional FHA? What are the rates right now that people can, the range, I guess, that people can have?
It's really
you
difficult.
can't give you one rate because it's a range. I've learned that. You can't give you a rate.
It's like asking somebody how's the market.
Yeah.
A lot of different answers.
The market's great. You could just use one more listing, right? You ready to sell your house?
Well, Bob Gervais, has the great answer to that question.
Yes.
You know that? And by the way, Bob, is he still in the hospital?
I have not heard
I have not
he's out.
heard.
Yeah, I've not heard he's out, but I've heard that he's improving.
Well, that's
daily.
a big thing, and we can't wait to have him come back and visit with us again. But Bob answers that question. Well, it depends if you're buying, selling, or investing, and it's really true because
How's the
they
market?
are different. How's the market?
Yeah.
That kind of thing. All right, what are they, Guy?
We wander a little
Kind of
bit.
went off the side there.
In the interest of not going to jail, I probably shouldn't quote an actual rate. There's about 26 things that go into quoting an accurate one. So, the ranges are the low fours, though. They really are.
So they've come down a little bit from that 5%.
They've taken a really good drop in the last couple of weeks. I'm actually looking at rates down in the 3s again.
Wow.
No kidding.
So it's a great market for buyers.
Wow.
Just have to and sellers too. I mean, there's people. All of a sudden, I'm starting to see refinances out there just because people's houses are worth a little bit more than they thought. They're actually appreciating at a pretty decent rate.
We talked about that on the TV show. It's a little
Mm-hmm.
surge in those refis now.
Well, Joe even said on the way over here, he says, I have equity in my house, didn't
Woohoo,
you?
throw a party.
It was like, you're kidding. And yeah, you do now. Equity. Yeah, for sure.
It's nice. And everybody talks about, how tough everything got when the pendulum just kind of, it does that every now and then. It'll swing a little bit too far one way. And I feel, in some ways it did, but a couple of pretty decent things came out of it. I mean, literally prepayment penalties are a thing of the past now.
Prepayment penalties.
I know.
That's so nice.
Mm-hmm.
Yeah. And I still get asked that question, at least every week or two, because it is a concern. Life happens and you're not necessarily going to be in your house for 30 years and you don't want to be a slave to something like that.
So in other words, if I sold it earlier and I paid it off, I would have a penalty there. Now I don't have that. Mm-hmm. That makes sense. I absolutely agree with that. Yeah.
Mm-hmm. And interest onlys, they weren't the worst of the worst for sure when it came to the loan.
It was the
programs,
negative
but
AMs that
yes.
were really bad.
Yeah. So those are definitely a thing of the past.
And you're not doing any of those, and you're not seeing it. You're not doing any of those as a mortgage lender. And Shelley, you're not seeing any of those come through now on Tycor's closings of those types of loans.
Mm-mm.
Okay.
Nope.
No, the QM, good and bad comes out of, I think, every legislation. And in this one, they hit it all right on a couple of things, not everything, but
Well, that's
norm.
a pretty standard grade. Yeah.
Well, for government, that's an improvement.
Throw the law out there; they'll figure it out.
but literally, I mean, with one other thing, like geodesic domes, believe it or not, log cabins, places like that. It's been almost a secret that if you have some comps for those kinds of properties, that you can get it done. But there actually came out with a memo last week from Fannie, talking about if you can actually have your appraiser come up with, a reasonable value for these properties, we can get them done now.
Mm-hmm.
So, I know that doesn't hit everybody, and we probably need to hit.
Tell me about
market,
manufactured homes on land. We have a lot of properties like that in Jackson County. Lots of them.
It's always been a point of contention. They've always looked at them just a little bit different than stick-built houses. I know if you put my stick-built house on a trailer, you couldn't get it to the street, let alone down the road at 55 miles an hour. So I think we up in the Northwest understand that they're built really well. Unfortunately, they kind of. Yes.
We'll hold that
can
thought.
do it.
We'll come back and talk to that in a minute about manufactured homes, because there's a lot of properties out there that
good
we come
options
across,
out
and
there.
maybe a good option for you. Anyway, the Real Estate Show here on KMED. We'll take a break. Our final segment with Shelley Culbertson from Tycor Title and Guy Giles from Summit Funding. We'll return right after this. The Real Estate Show continues here on KMED this weekend. Pete Belcaster and Joe Brett, the real estate guys, with you here today. And thanks for being with us. Hope you're going to have a good weekend, whatever your plans call for, that's for sure.
We need to Snapchat our shows here each week.
That's right.
Yeah.
I was just Snapchatting on the break.
How can you do that?
Shelley's more advanced.
Shelley's advanced in many ways, isn't she?
I'm not touching that one.
Of course. None of us broke our ankle by falling down a stair. Other
That's
than that,
right.
But Shelley, it's kind of a
Hey, I
kill out
live
of
life
that.
on the edge of the stair.
Well, it hasn't stopped you from anything else, I
No,
see, except
pretty
maybe
much.
slowed you down a
Yeah, I
bit.
can't drive a car. That's about it.
Did anybody see the great cartoon in the Mail Tribune a day or two ago? The student debt cartoon. Here's a little guy. Here's a little guy with a shovel, and he's dug a hole about half a mile down from ground level. And at the bottom down there, it says student debt, and at the top it says home ownership. And he yells up and he says, "I'm just laying the foundation." It's like they're never going to get out of that hole.
That's
boy.
awesome.
That's a good one.
No,
was
not
really
really
good.
awesome.
Yeah, home ownership. I've got one that I wanted to share with you. And by the way, we're with Shelley Culbertson from Tycor Title and Guy Giles from Summit Funding, who's going to be our new mortgage expert here on the Real Estate Show. I had here it is. Okay, I got just a quick question for summer. Okay, it's coming here. This came out of Money Magazine. All right. What outdoor feature would you most like for your home? Okay, this is nationally. What outdoor feature do you think people want for their homes? All right, so you each get a guess. All right, Shelley.
Swimming pool.
Shelley says swimming pool. All right.
Water feature. I like the sounds of trickling water.
Water feature.
I would still
Guy?
have a Bugatti in the driveway.
What'd you say? What?
A Bugatti. It's kind of a
What's
cool
that?
car.
It's not a bug. It's actually a car, a motor vehicle.
Yeah, you people are pathetic. I mean, that's all I can say. Okay, number one thing people want in their home: 30%, a pool.
Woohoo!
All right, next
And
20.
that wasn't taken in Minnesota, that survey.
Yeah, no.
28% want a deck.
Oh.
26% want a screened-in porch. And 16% want an outdoor kitchen.
That outdoor kitchen is a close
kitchen.
second.
Now, here's
Yeah.
the deal at my house. I go home, open my back garage door, pull out a great big tub, and my pool's up about 2 hours later.
Yeah.
Not quite the same thing.
I don't want-
No, we put you
That
in a
doesn't count?
No, you go into a different category than the rest of us.
I have
do.
a pool. It just sits in my
My
garage
husband
over
would have
there.
said a kegerator.
A pool. There's lots of pools. Pools are a lot of work, though, too.
They are a lot
Anyway,
of
you
work.
know that.
They're fun, though.
Yeah,
They
A
are
pool
fun.
on Wabash.
They can be fun.
It's a place of a lot of fun.
Yeah, for a
Well,
while
you
when
kinda
you're
got-
when you're younger.
Yeah.
You kind of got the best of both worlds when you're filling it because you got the water feature and the swimming pool.
There you go.
That's
He's
really
a good
true.
addition, isn't he?
All right. Well, okay. So we're going to be out of time here in a second. I just want to say back to we'll go over to Guy here on the on funding. So, all right.
Mobile home thoughts we needed to finish up on.
We were talking about manufactured homes on property because really in Jackson County and Josephine County, for that matter, all over, there are really some nice properties with manufactured homes on them. So but the lending is always kind of seems to be tricky.
Yeah, they tightened up on them a lot at the beginning of this whole thing, and they've loosened them up. We are direct lender servicers for manufactured houses, so we're getting them done
what does that
all
mean?
the time.
What does that mean?
It means that we don't have a lot of the overlays that a lot of the banks have. They'll say, hey, we want 6 months reserves, or we want, and I'm just making up these guidelines.
Right.
Different overlays, and we, as a direct lender, we just have a lot less hoops to jump through, I guess, when it comes to that. And then we service most of our own stuff also, so you don't have to worry about writing a check to Bangladesh next month and then one to Korea, or worrying who you're paying your bill to every month. So it's kind of a nice thing.
And Shelley, do you see manufactured homes come through on the loans? I mean, and they're really all over.
Yes.
Yeah.
Actually, we have seen a big turn since first of the year, and I think it all goes to consumer confidence. And we're seeing a lot more investors come into the market, and not just buy one or two. They're buying up a lot of homes, and they have a lot of cash.
Okay, but what are they doing with these homes? They're not turning them into rentals. They are?
Because what is our vacancy rate?
Well, it was 1.5%
1.8.
last
Exactly.
month.
If I had money, I would be buying rentals
That's what I said.
now.
I wanted to win Powerball, and I wanted to sink about $400 million into residential rental neighborhoods. I would build subdivisions that are all rental.
Yeah.
But you couldn't buy a single one of them.
Yeah. The other thing that we're starting to see, and we had 2 or 3 closes last month, and that is 1031 exchanges, which was non-existent for the last 5 years.
Tell people what a 1031
What a
exchange
1031 exchange is. If an investor wants to diversify his money, he can actually sell one property, and he can shelter that money from taxes and buy additional properties with it. Mm-hmm. And so it's just basically he cannot touch his money. What happens is when he sells his property, that money goes into a exchange holder. That holder holds on to the money, and then he can go purchase more properties with it.
And they have only X amount of days in order to purchase this property, correct?
Exactly. Right. They have to identify their properties. I believe, I'd hate to say these because I'm not positive, but I want to say 45 days they have to identify the property, and then they have to close, I want to say 120 or 180 days.
Yeah, you're right. You're right there in the ballpark. Yep.
Yeah.
And a 1031 exchange is handled just through a title company?
No, we do not. We close the transactions.
You close it.
But they're actual 1031 exchange companies or attorneys.
Are the ones that do
now,
that.
Now, our parent company, Fidelity, does have a 1031 exchange company. It's called IPX Exchange, and they're based out of Portland, but they do business down here.
Mm-hmm.
And capital gains, the tax money you're sheltered from is the capital gains tax that you would pay on the amount of profit that you get from the home. What's
and
that about 30, 33%?
Yeah. And it doesn't mean that they're going to never have to pay that. It's just deferring it because they have to buy up.
Right.
They have to spend all their money.
Put that money to
more
work.
than what you just did.
Yeah.
Right.
And you even have to keep the same loan amount or go higher up on it. If you take any of that money out, you are taxed on the money you take out.
And there's always talk about they're going to stop 1031 exchanges, at the state level, et cetera, but so far that has not happened. And that's where the Oregon Association of Realtors, companies that have to, work with this, has to fight for these types of things for property owners. So we're always under that attack. And as we found also, real estate transactions are such easy targets to tax, don't we? I mean, it's just an easy target, and so far that has been, bitten off, and Oregonians
Isn't there a
have agreed
special
with
legislative branch that just dreams up new real estate taxes?
Well, it's not just real estate
taxes.
No,
Mortgage interest deduction.
Their ploy is to hide it in other bills.
All right, we're going to be out of time. Guy Giles, Summit Funding. Where can people get a hold of you now? I know your office, you say, is back at Costco. So how can people get a hold of you if they want to talk to you about some loans and some information, how you can help them?
Well, I'd love them to give me a call at 541-944-6987. That's the fastest way to get in touch with me, but I generally always have that phone with me, and I'll pick it up.
Yeah? You got an email address?
Yes, it's ggiles@summitfunding.net.
Yeah.
So just ggiles.
What's your MLS number?
My MLS number is 666-853, and my branch one, which should mention also, is number 114-2243, and we are an equal opportunity housing.
And
we are in compliance.
And we're compliant. We're compliant with government rules.
Nothing like safe lending.
That'll do it for the Real Estate Show this weekend. Thanks for being with us. Pete and Joe with you. We'll be back next Saturday. Don't forget, 1 o'clock will be our new show time here on Saturday. Have a great week, and God bless.
Thank you for listening to the Original Real Estate Show with Pete Belcastro and Joe Brett, the Real Estate Guys. For advice, guidance, or counsel on any of our topics, or to watch a replay of today's show, visit our website at realestateshoworegon.com. This show is sponsored by RE/MAX, Ideal Brokers of Southern Oregon, Ticor Title, All Cities Property Management, and the Jackson Soil and Water Conservation District. We'll continue our weekly quest to enhance the value of your property and to make you a smart real estate consumer when we gather every Saturday and Sunday on KMED for the one and only original real estate show.